one request when you're kind of telling, say for example, sales growing or margin, just tell what could be the trigger, right? That I sort of missed in Shantanu your presentation. So for example, I forgot what are the triggers for Punjab, for example, right? The if such and such items happen, then say for example, sales might go by 10%, 15%, right?
So
That connection was missing for
this
me.
is you asking for the rationale behind the numbers.
Yeah, yeah, exactly.
Okay.
Yeah, is my screen visible?
Yes.
Right. So very good evening, everyone. So today we'll be presenting IPL's valuation. We have already presented the company. We have already gone through one round of this. Building on Nirvana sir's note, uh, uh, we'll again try to do go through its financials again. So for other interns which weren't present, India Pesticides Limited is a chemical company. You can just go on to screen or just look at its recent PPT. You'll get the gist of this company. Very on sound. It's a beautiful. It's a very quality business. Currently, after the IPO, it went public in 2021 July. So we are having close to 2 years of listing, and it's pretty beaten down close to 30% from its all-time high. So it presents a decent opportunity for us, and that has been the rationale behind Gaurav sir and Nirvana sir selecting this company. So first, I think we'll go through the financial which we have on paper, which we have available to us. Then we'll go on to the assumptions. So I'll try to set the expectations, and we'll go through the cases and the whole cycle which the Rishabh's team also been through. So all these figures are from the consolidated basis. For FY 19, 20, and 21, the data has been taken from their IPO, their draft hearing, their prospectus. For FY 22, you have the annual report out, and FY 23, um, they haven't released the annual report, but you have financial results uploaded out there. So all of them are on a consolidated basis to have some sort of uniformity. All these figures are in million rupees. So if you want to convert them into crores for a ease of for a heuristic, for a ease of understanding, just divide these figures by 10, you'll get the idea. So let's starting with revenue. So in FY 19, the total revenue stood at this figure. This is the year-on-year basis growth, which will set the expectation. Very decent growth, except for FY 21, 22, where they had the COVID effect, or in general, the chemical sector is pretty beaten down. But the top line has grown very well, and this is the current their top line is uh, close to 900 crores. This has been the year-on-year growth. COGS, sorry, gross margins. This was, I believe, which Punjab and our also model did not uh, have it correctly, but this time it's correct. My my idea of gross margin is the vanilla one, in which you just take costs and you don't take the change in inventory. So if you remember the last discussion we had, Nirvana sir mentioned that he accounts for change in inventory as well. So I believe when we took IPL also does the same. So when you take that into account, it gives you a much better, a rosier picture of gross margins. And as you can see, gross margins have been pretty lucrative in the high range of 50s, except for this FY 23, in which if you read through these last 3 quarters, they have been horrible in terms of India pesticides, because what the expectations were set of a 55% gross margin, they were all beaten down. Now the gross margins are in the range of 46% for this FY 23. All these other factors, which are employee finance, for employee benefit or employee cost, we have again these are expressed in the percentage as a percentage of revenue, and in our modeling also we'll just take a simplification or assumption for the same. Finance cost, it has very low debt on its book. Asta had discussed this couple of days back with Nirvana sir, and I'll explain the rationale behind our projection. DNA, depreciation amortization would be on a similar line. Very low currently, even though it is doing decent capex, which we'll model for. again represented as a percentage of revenue. Other expenses are very interesting. It is significant. You can say 20%. They account for uh, let's say contract labor, power cost, or XYZ thing, which have been the recent culprits which the company uh, gave for their depression in gross margins. So moving on to taxes, taxes has been pretty consistent for the company, 25% in a very low band of 20 to 26. Uh, Moving on to PAT margins, say before this a quarter, 15% PAT for the first two FY 19, 20, 23, 21% PAT. Uh, this year again, as I mentioned, power cost, fuel cost, other expenses are culprits of this 16% PAT. EBITDA, uh, EBITDA has been in a very it touched highs of 30, 31, 32%. It's back at 23%. Uh, Relatively, still very modest, still very uh, good for such a business. Uh, EPS for this year was at 12.57. I'll share the assumptions in which we had, and PE currently it's close to 18.4. All right. So these were the financials of India pesticides for every possible data which we have on. So we'll move on to the assumption sheet, and I'll explain what do we think of it. Yeah. So we have again modeled for three cases. These were the factors which Noah had mentioned. So we have a decent explanation on each of the factors on what the rationale behind them is XYZ. All right. Bull case, we gave a probability of 40% for that happening. Three cases have been taken, the very standard bull bear and the normal case, which would be the mediation between these two extremes. Bull case, we project a revenue growth of 22%, which this decreasing trend is a normal practice in equity research or in modeling. So you assume the pace of the company wouldn't be able to sustain at a higher growth rate given it increases size, it increases the pace. Gross margins, the very same for the bull case, we are assuming at a 48% and decreasing. This is on the very basis that this whole chemical sector has bottomed out and things should improve, and it is a good buy at this moment. Gross margins decreasing at a very modest rate is behind the rational key. As competition increases, as XYZ factors increase, you don't get that same competitive advantage, but we have still taken a very modest decrease. This is constant across all cases. All the other things are more or less assumptions of what historic averages have been, and they have been very consistent for these companies. No anomalies or anything that has been modeled for. Let's say tax rate and every other. So the idea behind revenue growth and etc. was shared in detail in our last model, in which I don't think this was the area of discussion, in which we had mentioned that the capex, whatever is happening, and the asset turnover, which the company and the analysts pretty much agree on, that would result in the revenue growth, and we just took a CAGR of it, which has been reflected in the new model as well. This was the rationale. I think gross margins were the problem which we faced in the last model, and this is a simplification of that. The CAGR would be XYZ, and this is the capex schedule, which is pretty much what they are guided for and would be sticking to. All right. So the bull case again, we mentioned revenue growth of 22% CAGR, gross margins should be elevated. It's still not as we don't see them coming back to the levels of 50%, which, as I mentioned, everyone is obsessed with. The management also says that it is a bit more optimistic to aim for the 50%, and this is our bull case. Still, we have taken 48%. One thing which I would like to mention is that a word which I would attach to this whole exercise is conservative. So if we are wrong, we won't be wrong by much. But if we are right, you would be in for a surprise, because we have taken a lot of cushion, we have taken a lot of margin of safety, so that being conservative, it would be a much better. If it is a buy in this scenario, in an optimistic case, it would be a sheer buy. It would be a no-brainer. So, right, bull case 22% CAGR, gross margins should revert back to what they have been to 48%. All the other things are pretty much assumptions of the historic averages. The bear case would be, as I mentioned, key in our PPT in detail, key the growth driver would be the new plant, which is the Hamirpur plant. So if that doesn't pan out as well, greenfield expansion and XYZ things, uh, this is very pessimistic on our part, but uh, it could be a very possible thing to happen, considering it is a greenfield expansion. This is something which they have not done for the past 6 7 years. All these figures you see have come from Sandila plant, but now the growth from FY 26 25 onwards has to come from the new plant, uh, uh, which could pose challenges which the company hasn't faced. So be a case, but we still put the probability as 0.1 because we don't see any massive thing happening. These assumptions are pretty pessimistic on our normal case. We have given the probability at 50%. This is what we could see happening. Gross margins would be depressed, but still very respectable at 45% in the range of 46 to 45%. A revenue growth of close to 20% would be decent. So this is basically the whole idea. Depreciation schedule, we have taken the very same exercise which Nirvana sir did for HG Infra. That would be the revenue and the fixed assets. The number in blue are hard coded. I've just picked them up uh, from their annual financial statements. So we calculated the net fixed asset uh, ratio. We took an average of them, historic average. On that, uh, we did the same exercise for depreciation as a percentage of net fixed asset, and we projected that for depreciation, which would be a function of yeah. So yeah, overall, this sums it up for the cases for our assumption. These are the input figures, which are dynamic in nature. I believe the share price is currently uh, yeah, it is at 231 exact. So 231 share price in rupees. Outstanding shares are 115.2 according to their FY 23 financial results. We in our exercise in the last exercise, which Nirvana sir mentioned the notes and led the discussion. We had given I believe 25 was the number which everyone settled on, and we projected the upside for the same number in our notes. So in our even bear case, we mentioned that it would give 100% upside, which was very optimistic, very not very realistic on our part. I believe 20 T would be a realistic one, and we believe for correct case three is something which we do see panning out. We'll be happy to take any question on these assumptions later. So for these selections, we project a upside of 74% for a 3 year holding period, which would result in a CAGR close to 20% on a forward PE of 11.5 uh, for a upside on a 20 P expected. Yeah, so I'll conclude with this. This is a buy. This is the executive summary. We're happy to take any questions.
Thanks, Mayank. This was quite nice. Enjoyed it.
Yes,
So
same.
don't stop sharing. Yeah. So so depreciation. These figures that you're showing me. And 117.5 is 12 crores, right? And then it's 14 crores.
Yes, so this there was this disparity because we took these figures. This was a last minute exercise, so we
Mhm.
took this figure from the last one which we did, and there was this disparity. But yeah, this has been taken from the main sheet. This could be in
Okay.
millions, so we just
Mhm.
divide by 10 to get the crores. Yeah.
Yeah, yeah. So that's fine. The only thing is I'm confused about these figures in blue. For FY 23, A depreciation is 11 million. It should be 110 million. No? It's
Yes,
11
sir. That
crores.
is sir in crores. So I mentioned this
Acha.
in
Oh,
there.
sorry.
Yeah.
Okay.
So
The
that is
heading
the
is in.
disparity which I was. Yeah. This is what I
Okay,
was
okay,
doing.
okay.
Yeah.
Got it.
Yeah.
So one thing I'm not clear on exactly, what exactly is their capex schedule? So from what you guys presented last time, I thought that
Hmm.
FY 23 schedule was 70 crores, out of which they have spent 54 crores till December. Am I right on that, Asta?
So can you please repeat?
FY 23 they plan to do 70 crores, out of which they had done 54 crores till Q3.
Uh, yes, sir. Not 50. I don't even like exactly. I don't remember the number, but
Hmm.
at the end of FY23 they have done nearly 60 crores of capex.
Okay, 60 crores of capex, which is still in CWIP, so it has not flown to assets, is it? I am actually confused, guys, because Screener is showing zero capex for FY23. So if you guys
Um,
can, yeah, if you guys can
yes, so
just
that
lay it
would
out here.
be so in I think capital work in progress start. Yeah, so capital work in progress are 70 CR for
Yeah, so this is a little strange one because capital work in progress in that cash flow is 73, but in the balance sheet, if you see, there is a CWIP in balance sheet also, right? There it is showing as 27 crores. So anyway, let's not, if you guys are clear about the capex, can you just tell me like what is the schedule and how much did they do in FY23 and what do they plan to do in FY24 and 25?
सर एक्चुअली उनके लेटेस्ट कॉन्फ्रेंस कॉल में उन्होंने कहा था कि वो अभी फिर से 50 सीआर का कैपेक्स करेंगे इन देयर एग्जिस्टिंग प्लांट, मतलब थोड़ा सा लैंड एक्वायर करेंगे और वहाँ पे न्यू मॉलिक्यूल्स इंट्रोड्यूस करेंगे। एंड आफ्टर दैट उन्होंने 110 करोड़ का 110 और नियरली 100 करोड़ का कैपेक्स करेंगे न्यू प्लांट के लिए, दैट इज हमीरपुर प्लांट के लिए। तो नियरली 150 करोड़ का कैपेक्स होने वाला है इस बार।
अच्छा, ओके, आपने जो नोट भेजा था उसमें आपने लिखा था फॉर FY24 द गाइडेंस इज 110 करोड़ आउट ऑफ विच 50 करोड़ इज फॉर स्पेशलाइज्ड प्रोडक्ट एंड 60 करोड़ फॉर हमीरपुर प्लांट।
60 करोड़।
हाँ,
correct.
मतलब
So
मैं
that
Was
is
that
correct.
for
Yeah,
FY23 or 24?
24 यार, तुम्हारे ही नोट्स है, तुमने जो भेजे हैं ना IPL के, यू कैन रेफर टू योर नोट्स दैट यू सेंट ऑन व्हाट्सएप दैट डे आफ्टर योर प्रेजेंटेशन।
Okay, sir.
मैंने एक सेट ऑफ क्वेश्चंस भेजे थे उसके अगेन।
yes, so I'll just present
या,
the report here. Just a second.
और इफ यू गाइस नो द फिगर्स जस्ट जस्ट पुट इट अप ईयर वाइज क्या कैपेक्स है,
So
दैट इज
actually,
द।
they haven't posted the transcript, so it's had been very difficult for us to listen to the recording and just make notes. I'll share the Centum report. They did
ओके,
uh, they did the notes, so I'll just
ओके,
share
ओके,
that.
श्योर।
Yeah, just
Gaurav, meanwhile, if you have anything, any questions?
No, no, nothing.
yeah. Okay, so this has been the capex which they guided for FY24,
Hmm,
which would happen in this year.
correct.
550 crore would go in the Sandila, the existing plant.
Yeah,
Now this is new news to us because management had guided that the Sandila plant has paid. There is no area. There is nothing,
okay.
nothing to have. So this year it was all would have gone to the new plant, which this is a subsidiary just for the
Okay.
new plant.
Hmm.
So that's Shivala special. Yeah. So this would go into 60 crores would go there. 50 crores would go there. 60.
Okay, fine. So for FY24, 110 crore is what will happen.
Yes. So
Okay,
that has been, we had also modeled the same, the updated list. Yeah.
okay,
So
yeah.
FY20. Yeah,
So
this
can
is
you,
forward looking. Yeah, this is forward looking. So this is what would happen to revenue because capex done in this year would reflected in the next year, right? So
got it,
this is forward looking. Yeah.
got it. And what kind of net fixed asset turn you've taken? I think you've taken 4.2 or something like that, right?
Correct, sir. For depreciation calculation, now this is something which we hardly disparity for. So in the con calls in what the management was guiding to just for simplistic assumption. So they had guided for these asset turnovers to for you to get an idea कि top line कितने से grow करेगी, what is the capex
Hmm,
potential. But you also had raised this very same question in the last round of
hmm,
presentation. So this has been the net fix, and it has been pretty high. So I don't know why they were guiding for 2.5. So
hmm.
that is what the range we took for revenue projection. That in the best case scenario, the highest would. I mean, two is also very it's very safe, very conservative on their part. So that is what we are taking for the revenue. But yeah,
Acha, for
actually,
revenue,
I have
you
no
guys,
answer for that.
okay, for revenue, you guys have taken
In the
2,
range of
2.5, is it?
yeah, yeah. And that
Okay.
they have indicated.
Okay. So 2.5 means right now fixed assets I'm seeing is 248 crores, man. So 248 crores, and suppose they add 110 crore next year, uh, plus they uh, have capital work in progress, say 30, 40 crores. That's around 400. So 400 multiplied by 2.5 is 1000 crores, right? So, but your FY25 assumptions are larger than that, right? Like, I think your projections are much higher, right? So, around 1300.
Um,
So,
mhm.
yeah. So, your fixed asset turns will be, I think, higher. It's not 2.5. You've modeled higher because have you modeled fixed assets anywhere from FY24, 25, 26? Like,
No, sir. So that would be again a simplification because so the problem here is that the capex is not uniform, right? So 70, 100, and for the next this year also should be the projected what they were that Hamirpur plant would get 100 to 125 crores. So this has been the assumption for Kager. So I believe again the numbers wouldn't be right on point. I mean, even if you look for it,
no,
I
so
think
Mike,
that
I
it
am
is on
trying
the
to
right.
connect two things. So two things have to make sense together. Like your
Mm-hmm.
revenue growth guidance of 20% that I'm very comfortable with. What I'm
Mm-hmm.
trying to understand is that see, net fixed asset turnover will not be able to jump up suddenly. So in order to achieve, even if demand is there, they can sell that much. They have to set up enough
Mm-hmm.
capacity. So the only link I'm trying to bring in is, are they doing enough capex to reach these revenue numbers of say 1500 crores in 3 more years, right? So 1500 crores divided by their stable net fixed asset turnover should be the should be the total net fixed assets by the end of
Mm-hmm.
say FY25 or mid of FY26. That is all I'm trying to sort of get at. So it's okay. I think let me absorb this. You will share these sheets, right? So I'll also go through them and I'll try to figure that out. If I have any
Um,
doubts,
uh,
I'll come back to you. Yeah.
sure, sure. No, actually, this con call, I mean, this information we also haven't been able to absorb. I mean, that because the idea has been ki FY24 they'll hit 1100 CR
Mhm.
top line, which was the idea because Sandila 70 crore. Now this 110 crore would reflect here. Uh,
Right.
yeah, so that would give close to that is close to a two asset turnover in our case for the projection of 110 CR. But
Mhm.
yeah, this con call, I mean, we haven't been able to read the transcript, and
It's okay. It's okay, man. So
this
that's
doesn't
fine.
sound yeah, correct. Yeah,
Yeah. So
because
let me also.
1100 should be hit in this FY24. That has been the whole idea of the capex for 70
Okay.
CR. Now the
Okay.
next 110 CR should have even more potential. So I don't know where this figure came from. I don't know how
No,
they
the
reported this.
110 CR may
Yeah.
not be able to ramp up from day one. So maybe,
Mhm.
it will ramp
That
up
I
in
think that
FY20.
is the rationale that we are taking to 2.5 range
Yeah.
on
So
being
that's why,
conservative. Yeah.
exactly. So that's why I was
Hmm.
questioning whether your 4.3x assumption for net fixed asset turnover is it too aggressive or not. That is the
Yeah,
only
so
thing I
we
was
had
questioning.
modeled for again 2.5. We took a very conservative figure to reach the CAGR for the yeah.
Okay, okay. ठीक है. I'll go through the sheet, man. What is that
Hmm.
report? Do share that report on the WhatsApp group, huh? The brokerage
So I
report
think
that
I've already shared the
you already
sentiment.
shared it. And
I'll reshare. I'll reshare it.
yeah, you can please reshare it. I'll go through
Hmm.
it. And one last question from my side is, will this capex be internally funded or have they guided for some debt?
So could you take this question?
सर उन्होंने ऐसा कुछ कहा नहीं है कि वो डेट ट्रेस करेंगे. So I think
Okay.
it will be
So it's
raised
easy to check
internally.
also. Like, अभी उनके
So
पास
I
क्या?
think they have 70 CR cash on the books. So this was the question which
Okay.
I asked and all I've already discussed on because that was a
Mm-hmm.
very logical question to. I mean, how
Right.
yeah. So they have how much?
हाँ, current assets देखो एक बार.
Yeah, adding these two other balances and there's a
हाँ,
60 CR, close
60
to
CR,
60 CR on their
61
yeah
CR.
books.
Correct.
Yeah. So,
So yeah, that is
yeah.
decent cash balance. They may add some debt, but nothing outrageous,
Mm,
right?
mm.
So,
Yeah,
okay,
this
got
is what was sort of I had also mentioned that their inventories are grown 60%. I don't know how much they're stocking on. I think Asta mentioned that something which would be utilized in Q1 of this year. So maybe
it.
that some chemical has very high utilization in Q1. So maybe that is the reason. But their asset, this inventory has grown in 60%, and I mean their
Mm,
total assets have grown very modestly. So this is
yeah.
something which yeah should
So
be.
that is a point to sort of actually inventory days wise, it is flat FY22 to FY23, not much
Hmm.
increase. So I think it's fine overall. ठीक है, Mayank. I get a sense of the picture that you're trying to paint. I'll need some time to absorb the numbers. So once you share these, I'll just maybe get back with one or two more questions. But otherwise, the model seems pretty clear. So
Um, yes, so for our normal case, we talk this very modest
hmm,
46% gross margins and a 20% CAGR that would result in
yeah,
70%.
yeah. So
This
you're
is a
saying
very
74% over 3 years.
for a 20 forward P, I mean,
20
which
forward P.
yeah,
Yeah.
yeah, yeah.
Yeah.
Um,
Yeah, 20 forward P seems reasonable to
expected.
me. It's conservative, in fact, because
Mm-hmm.
it's doing 25% plus ROCs. Like ROCs have dropped a lot from 22 to
Yes.
23, but it's still at 28%. So if they continue to do 25% plus ROC, 20P is actually very reasonable. So yeah, I think I'm comfortable with the modeling.
I
Yeah.
think P haven't, I mean, by listing it was, yeah, by listing it was 25, 28.
Hmm.
And now this is the modest we're taking 20 as a median, even though
Yeah.
25, even though seems sort of far-fetched, unless the sector
No,
is
see,
in the.
25 will easily happen when the sector comes back in favor, when you
Mhm.
can see growth, when market is a little less scared. All that 25 can easily happen, but it's always better to sort of model a little conservatively. If you are
Mhm.
comfortable CAGR on conservative modeling, then you will make a lot more money if market gives even a little bit of
Yes.
enthusiasm on it, right?
So that has been the idea. Every assumption we took was on a little bit on a higher side, so that even though we come with a
So,
uh,
so your pessimistic case revenue growth is some 17.5%, right?
yes,
Bear
so that would
case.
be case two. Yeah, that's 1870. Yeah.
Yeah, so
So
that is one
that would,
question. That is
yeah,
one
that would,
question I would ask. Like, bear case, are you guys being too bullish, or you think that is the actual bear case for in terms of
so the
revenue?
idea again is that every possible number which we see, which has been presented towards us, it has come from the Sandela plan, which I think
Yeah,
started in 2016. Yeah. So that year it started. Now the
right,
growth trigger has to come from a greenfield expansion. They
correct.
would. I mean that is a very big if. If that
And I
happens, then
forgot
they
the
would have to.
answer. I had asked this, I think, last time, Mayank. I forgot the answer. Is it
Hmm.
the same products they are scaling up in Hamirpur or completely new products?
Yeah. So could you take this?
Sir, it's totally new molecules.
Totally new molecules with zero overlap with Sandila.
यस सर, पर अगर कैपेसिटी वहां से फुलफिल नहीं होगी तो दे विल थिंक कि वहां हमीरपुर से दे कैन यूटिलाइज और
हाँ,
प्रोड्यूस.
समझ गया, लेकिन नए प्रोडक्ट्स हैं पूरी तरह से।
हाँ, यस सर.
और इनका
I
कुछ
mean
इन्होंने
that.
बोल
Sorry, sir. No,
या
no, sir.
सॉरी,
So,
one follow-up
no, no, sir.
question.
Please.
Do have they said they have an order book already for these products or any commentary on demand,
Yeah.
how it will scale
Hmm.
up?
So they have always mentioned that demand, actually their utilization, their capacity has been the bottleneck. Demand side they have faced never an issue. They always have clients in the pipeline. They
That is
always
for
have orders.
Sandila, Mayank, right? That is for Sandila
No, so
existing
that
product.
has been the in general theme of this company that
Okay,
demand is never an issue. Their capacity has been always the issue. This is why they are going for such a massive plant. I mean, they are projected
okay,
at least 2x the capacity what Sandila would be. So that is very optimistic on their part. Demand hasn't been an
okay.
issue.
So that you're saying Hamirpur with this 110 crore capex, matlab whatever 60 crore is going to it, that itself will make it two times the size of Sandila. Something doesn't add up there, no? Because the current
Uh,
fixed.
I
As,
had shared the just a second. I think I had their environmental clearance report.
ha, you had shared in the notes, yeah.
Yeah, yeah. So I think if you look, they had mentioned I don't know how so many chemicals they took. They had mentioned that I think the analyst tried to actually get some idea of what the size would be of capex or
Yeah,
the capacity. I think they had mentioned that they've taken a very higher level of capacity or utilization.
yeah. If I can
Just
read
to
it
mention
out,
that. Yeah.
yeah, sorry, man, your notes only. So 36,000 tons is the technicals capacity, and you've mentioned the 29,000 tons capacity for 4 years, something like that.
Hmm.
So this is twice of Sandila, is it?
Huh. So that was the idea that they mentioned that they wouldn't have to visit again and again
Hmm.
for getting their getting approvals or XYZ thing.
Approvals.
So,
Got it.
so this is currently it is at 24,000 for Sandila, for
Right.
I mean major deal.
Right.
So
For
this is
technical.
the I was mentioning. They have a very beautiful this slide. See what has
Hmm.
happened and what it did. So yeah, this is what they are mentioning. 50 crores for again for Sandila and 60 would go into for Q4.
Right.
And this has been what they have been guided. And surprisingly, this company has always take the walk the talk check and whatever they promise they have delivered. That has been very good.
Right. So they are saying that Himachal Pradesh plant will start production from Q4 FY24. So we can
Hmm.
safely assume no contribution in FY24 from Hamirpur, right?
Yes, so actually the existing plant, existing products, which are the new products, they have pretty low contribution currently. I think it is 10 to 12% in the revenue.
Correct.
But if we just look at this con call, they have mentioned that the new products would be contributing. This is 175 CR.
Hmm.
So if you just take a very rough, I think this number came from 175 divided by 2.5, you'll get 70 CR capex. So this is what was done in FY23 or 20,
Okay.
23, which would result, which would give the growth. This is the idea, I think. But again, we
Got
haven't
it.
read this. Yeah,
No, got it. So what you're saying is FY24 revenue is going to come up only from more capacity utilization in Sandila.
that's and yes. And
And
as
they
mentioned, if I yeah. Mhm.
and they have enough space there. Like capacity utilization is not at some 90% or something like that, right? They have space.
This is also I'm not sure about because they had very clearly mentioned that Sandila it's done and dusted. I mean they have absorbed every single last drop, but now this additional 24 capex is also going. This is
Okay.
I'll
सर 2000 कैपेसिटी मेट्रिक टन क्या होता है
हाँ, 2000
केवी
Mhm.
metric ton.
हाँ तो अभी वो उनका बाकी है लाइक पूरा कैपेसिटी इस साल होने वाला था लेकिन हुआ नहीं क्योंकि जो नए मॉलिक्यूल्स थे उनकी वैल्यू काफी ज्यादा थी तो वो प्रोडक्शन वाइज थोड़ा कम प्रोड्यूस किया गया लेकिन उसका
Mhm.
वैल्यू वाइज काफी ज्यादा रियलाइजेशन था
Yes.
Got it.
So utilization. I mean, just looking at utilization, they mentioned that volumes wouldn't be a good
Hmm.
proxy because again, we could have a chemical which produced in low quality would be valuable. So there could be inverse relation. So utilization wouldn't be a decent proxy for this company.
So basically, what you're saying is what I can put together between what both of you are saying is new chemicals might have higher net fixed asset turns, is it? That they are higher realization. So even with lower volume, they can produce a higher revenue.
No, so some chemicals.
In
I
some
mean,
units.
not in the that's not it.
Okay. Okay. All right. Yeah. Thanks, Mayank. Thanks, Asta. I think this was nice. I'll get back after absorbing the
Mm.
model if I have any more questions. Thank you. Gaurav, over to you.
No questions from my side. I've been trying to buy this stock and the stock just jumps up.
Yeah, I think there's 5-6% loss this week.
Yeah. I just put a buy order. I saw
Okay.
that. I mean, morning it was at 90. I think 219 rupees.
Mm.
So I put a buy order and it jumped up 5% like in the same day and the next day.
Mm-hmm.
So
I
yeah.
think today the rating was very small scale.
So just to give you guys some context, I was discussing with Harsh on
Mm.
Punjab and India pesticides. So basically, even he thinks that. Shantanu, I was basically discussing Shantanu and Rishabh with Harsh that is it the Shroff connection? Is it the family relationship thing that is making Punjab tick? So he says partly it's that. So he compared it himself only with IPL, and he said from a process chemistry point of view, from a chemistry capability point of view, IPL is probably a better player. Uh, he is waiting to see if Punjab can add and scale up a non UPL supported client, like say for example, Nippon Koyoku is one they are trying to scale up. So if he says if they are able to scale up a large client, large molecule for non UPL kind of client, then he will consider Punjab to have also strong chemistry capabilities apart from the relationship angle. But he said IPL definitely has better chemistry capabilities. So from a valuation point of view, also that's why maybe IPL can even be 25, but Punjab for me will always be a 20 company till it proves that it can scale up molecules without UPL's help. So yeah,
I think the monsoon will also trigger a re-rating. I think most investors were sort of afraid that this year will also be a like an El
right,
Nino year and all. But the IMD projection, I don't know how right they are. This is the first time I'm tracking it real time.
right,
But I mean the rains have started coming in. At least they would start to get in Kerala. I mean the monsoon clouds would get into Kerala in the
right.
next 2 3 days. So hopefully
Yeah,
some levels of re-rating would happen.
yeah. That would be, I think, welcome news for the industry. Yeah,
Yeah, that is why I think agrochem businesses are anyways moving up. If you
yeah.
see,
This week only they started sort of moving up.
hmm
Right. Uh,
Yeah, I think El Nino is in that bit of a doomsday type prediction. I mean, long term average they have predicted close to 96% rainfall. So I don't know what how that.
96%. Sorry, what?
So long term average, whatever Gaurav sir
yeah,
was mentioning the
yes.
rainfall, yeah, that has been
Okay.
pretty in line.
So
Right.
normal is considered between 96 and 100% of the long-term average. Long-term average,
Yes,
as in like
yes, sir.
every. So they take the average rainfall over last 50 years, and
Mhm.
that's the measure.
I see. Okay. Got it.
Also they increased the government increased the MSP prices for many crops, so the farmers will be I mean assured a higher pay, right? So
Yeah.
the farmers might, I mean where would the farmers put this? I mean to increase productivity, right? Because higher MSP, and also assuming this an election year, maybe
Yeah.
this will also trigger some higher sales of these agrochem, especially
Yeah.
pesticides.
No, agree, agree. Being an election year, government will try to placate every, the mass
Mm.
segment. They'll try to make sure that they are all fine. So that's why even Aman Santhalia was mentioning that sugar MSP will remain, like sugar
Mm,
prices
mm, mm.
also
but
remain high.
But Nirvan, Aman Sontalia's thesis then falls down. No, his sugar, I mean, his entire thesis with Ponni
Ah, El
went,
Nino.
and this was on El Nino. So
Yeah,
I
no,
wanted to tell him that, but I refrained.
no. So basically, his thesis was that Ponni and this company will do especially well, even if El Nino happens. Now
Huh,
I think everybody might do well,
yeah,
not only these two.
yeah,
Yeah. So that's true. And with the money that farmers will get, I also hope they buy some two-wheelers, yeah, because that industry needs some growth. So yeah, I hope that happens.
no, but the premiumization drive is going on. I mean, I'm seeing that everywhere. I mean, if
Hmm.
you look at newspaper right now, there are 2 3 articles talking about premiumization. Uh, Companies buying warehouses, e-commerce still riding very high.
Hmm.
Brands are opening in tier 3 tier 4 cities, especially if you look at the SUV sales. People are going towards uh, larger size SUV. I mean more than 4 meter in length. So four
Yeah,
meter length SUVs are treated differently from a tax point of view, right?
right.
So I think, yeah, time has come when India is kind of going through that point. So let's see
But
how it goes.
that's that still moneyed people, I think, Gaurav. So like, see, the real sign of rural strength will be FMCG double-digit volume growth. uh, Two-wheeler, say, okay, two-wheeler may be an anomaly because maybe two-wheeler penetration has started reaching a level where growth will be only very incremental. But
Hmm.
still, like, we are still at the same level of sales where we were in 2019 or 18, I think, in
Hmm.
two-wheeler
Hmm.
last year. So that's 5 years, yeah. So at least some growth should be there, no? Like 2-3%, some kind of growth should be there. So I don't know. I mean, SUV, no doubt, but I think people buying SUV are not your typical average farmer, right? They can be your rich farmers of Haryana and Punjab, but uh,
Yeah, I mean, my point is that as you had also noticed with your
yeah,
that
yeah,
guy working at your place, right? People
yeah,
moving towards higher value items.
yeah. No,
So
that's
because of the
definitely
credit and
happening.
all,
Yeah, yeah.
credit and all. So my mother was talking to a lady, and she works. I mean, she earns like 10,000 rupees a month, but she pays a loan of 7,000.
Hmm.
So so
Right,
that's how things are.
right, right. Yeah, okay. Guys, any questions for Mayank and Astha on IPL? Okay, in general, anything else to discuss for the companies that you guys are prepping? Okay, all seems good. So, Gaurav, can we just right now just take a note of the schedule for the presentation, just so that we are all clear on,
Yeah, let's just do it right
yeah.
now.
So tomorrow, Sonakshi,
I'll first stop
yeah,
recording.
yeah, yeah.